So is Bitcoin a store of value? Okay,
Yes.
what do you mean by that?
Yeah, well, let's jump to the next slide and define store of value. So economic concept can be saved, retrieved, exchanged. Arguably, you can do all those things with Bitcoin. But all happening without experiencing a significant loss of purchasing power. I think that's where we get hung up on, is Bitcoin a store of value? So I wanted to look into that, right? I think arguably over time, gold, fine art, put wine, jewelry, other things in there from more of a commercial or retail perspective. Real estate is probably the biggest store of value globally, is Bitcoin. And I wanted to get your guys' thoughts on that, kind of dig into this, look at it objectively, and have a little bit of a conversation around it.
Okay.
So what do you guys think? Before we get into it.
Tony?
Oh man! Wow! I'm going to say. I'm going to answer it a little bit differently than when I first thought you were coming on here to talk about this. So I didn't embrace cryptocurrency and Bitcoin early on. Now we were talking about it, so
Yes,
we're
you
talking
did. You
about
did
it.
as
We
much as
bought
you-
it $500, $300. I get it.
You did as much as you would have borrowed gold or a painting.
Actually, I bought it more than I
Okay,
bought
there
a
you
gold
go. Right.
or a painting.
Right.
I mean, I saw upside in it. I saw value in it. I didn't see where it was going to go. Like I never like if gold were to go from 2,000 to 60,000, I could understand it. Bitcoin going from 200 to 60,000. I didn't understand. I didn't understand it at 30,000 where it is today. So I'm going to say it is, and pleasantly surprised, because I never thought it was going to reach the height that it has or has maintained.
In my mind, no question. Yes, absolutely, 100%. It is a store of value.
I was really hoping there was going to be a bit more controversy.
No, we can't. We have too much committed.
People want to see conflict. We should be arguing.
Well, I understand that, but we actually own this stuff. Like, we're not going to argue
Absolutely.
against our own positions.
No, I tried to look at it objectively, and I think what we're going to find here is that there's a stronger argument to be made that over time you're going to see this clearly become a larger store of value. But let's dig into that a little bit because I think it's an interesting story to tell. And so the thing I wanted to kind of focus on at first is just that idea that how can a store of value be so volatile? Right? We're talking about something that
Well, it's in its infancy.
Okay, exactly. Right?
I mean, it's anything that's in its infancy is, yeah, sure. It's that's it. I mean, that's why it could be so volatile. You couldn't expect something you have no historical context. So you have something that's 10 years old or whatever it is.
Gold is thousands of years.
Yeah, right, exactly.
But the numbers have gotten so big so quick.
But there's no context. That's
There
the
is
whole
no
point.
context. You're right.
So that's
You're
why
right.
I mean, when you look at Bitcoin now, the volatility in Bitcoin is the same as Tesla.
Yeah, it's come down a little bit, which you would expect
It's come
to
down a
see,
lot.
right? As that asset
Yeah.
class matures, the volatility should be lower. It's still high, but it's not 180 vol asset.
Right.
It's maybe
Yeah.
a 60 vol asset.
Yeah.
So couldn't agree more. Excuse me, couldn't agree more. Depends on your time frame. You look at something that can go down 80% year over year, and then can go up 1,000% in the next year. And I think what's interesting about this is that you see that obviously the longer that you've been in it, but you almost become a bit more immune or numb to that volatility compared to a traditional asset because you've been there for it went down 80%, but then I wrote it up the next 4,000% or so.
Plus, when something is 120 and it goes down to 70, it obviously becomes much more manageable and everything makes a lot more sense.
Yeah.
So what people can't handle is out of control volatility where the expected move is 100% of the price of the asset. Bitcoin's not that anymore. So, I mean, does it have risk? Of course, it has a ton of risk, but does it have any more risk than Tesla? Not really.
Yeah, that's a good point. Well,
Not by its implied volatility.
Not by its implied volatility, exactly.
Yeah. Let's put a little bit more context then around it. It does have those appealing characteristics. For anybody that's looking at this and saying, absolutely not, you guys are idiots, there's no way this is a store of value, right? Because that's still a view. I saw an article yesterday that was comparing this to the tulip bubble still. It's been around for 13 years. Mm-hmm. So it's scarce. And that's probably the most important element here in terms of store value over time if the volatility goes away. You have to have some degree of rarity, of scarcity, Bitcoin supply is capped at 21 million. If we use that direct comparison to gold, right, there's a finite amount of gold that we'll ever be able to mine out of the ground unless, some alchemists all of a sudden pop up. It's also decentralized, which makes it interesting, but I don't think is a necessary component of this at all. Gold is obviously decentralized in a sense. So it's it's insulated from intervention. And I think there's something to be said about the argument that it is digital gold, given that you could probably transfer this, obviously transfer it a lot more easily than gold, right?
Yeah, and there's enough. I would say there's probably more doubters also in this, which you need in order to. That's an appealing characteristic, is that there's enough naysayers. You've got enough people thinking that there's no value there, which is what you really need to create value.
Still early. Let's jump to the next slide and look at, what opponents are saying, because maybe we can break this down a little bit further. But number one, it's too volatile. So how can it be a store of value? It's also unregulated. I mean, we're just talking about there are people that hate this, right? And it seems to, at least at this point in time in the U.S., be coming from the top down. It's tough to argue that Elizabeth Warren is a proponent of crypto. To kind of call her out, to Gary Gensler, same thing. Like they don't seem to like it, at least on the surface.
Well, there's a lot of people that don't like crypto, but the fact that it's unregulated doesn't mean that it can't be a store of value. And also, the fact that it's volatile doesn't, that's also another ridiculous part of the argument.
So are biotech stocks. I mean,
there's a lot of stuff.
Right.
Yeah.
I mean, we always mention Tesla as an example, but I mean, there are thousands of stocks that are volatile.
I mean, I would be most concerned about the next one, which is insecure, and also the potential for we've seen some really bad cases of fraud.
Yeah, I agree. I think we need to separate Bitcoin and crypto or cryptocurrency and tokens and everything that happens there, because when you look at the Bitcoin network, you look at the blockchain. This is something that has an uptime since inception of 99.99%. Bitcoin has never been hacked. Bitcoin uses a proof of work consensus mechanism, which the argument on the other side of that is the environmental concerns, but there are solutions to that problem. The security is still, what it's been. It has not been compromised. So I think, if you look at Bitcoin especially, or specifically, there is a strong argument that it is secure. Banks can get robbed too, maybe not to the, the same detriment, but it's also not widely used, which I really want to focus on at the end here, because that's what is the actionable, interesting case to me. If we just compare this and argue, gold is a store of value, has been for thousands of years. Not that many people hold Bitcoin, but again, maybe still.
I mean, to be fair, not that many people hold gold.
I was just going to say that, and if they do, they can't find it, or it's not in a quote unquote secure place. It's in a drawer.
If you asked 100,000 people under the age of 30, do they have Bitcoin or gold? They have Bitcoin.
Oh, sure.
Yeah, it's about 100 to 1.
Yeah, I'd like to get some gold though, just have a
just to have it.
Yeah,
sure, you can buy it. It's available.
Let me ask you guys: do you have any gold?
I do.
Gold,
but not
physical gold.
No.
Like in your
I have physical silver
or something.
Physical silver.
I have gold
silver.
coins, and they're hard to trade.
Okay, but you're not stacking up bars because of the debasement.
No.
No, I've held this stuff for 40 years.
Okay. Yeah, same.
Awesome.
30 years, whatever it is.
Well,
so
jump to the next slide. This is interesting then. Kind of to your point, right? Is this actually happening? The beautiful thing about crypto, in my opinion, is that the transparency exists on chain. There's a fundamental element to it. You can look right at this. We can objectively say, is this theme growing? And I would argue that it is. So what we're looking at is a chart from looking at Bitcoin that's just showing the amount of addresses on the Bitcoin network that have a balance larger than one Bitcoin. So there's 44 million.
That's a lot.
It is. And I think what's interesting to me is it's not stagnant. It's growing. Addresses with a positive balance since 2020. And this might hinge on what happened since 2020. The largest monetary stimulus that we've ever seen. So maybe there's something to that. But the number of Bitcoin addresses with a positive balance increased by 11 million since then. If you look at, are people accumulating this? Arguably, yes, because the amount of addresses with more Bitcoin, with more than one Bitcoin, are growing at the same time. And that doesn't mean that Bitcoin goes straight up and everybody has this kind of, short-term outlook where they need this to happen right away. But to your point, Tom, I think if this continues to play out over time, right, and maybe the argument around currency debasement is, do you think that the monetary authorities, the Fed, the ECB, are they done with what they do in response to how this whole system works? If so, then this argument is flawed. But if you believe that we're going to continue to debase the currency, I think you're going to see the amount of people that hold this go up, which is interesting when you look at, if it is a store of value, how does it compare to all the other stores of value? And if we jump to the next slide, I think that's the kind of point I finally want to drive home here. We have companies in the stock market with market caps that dwarf the market cap of Bitcoin as a quote-unquote store of value. I am not saying that this is going to be widely used by billions of people globally, but I do think it could be a $2 trillion market cap asset.
Wasn't it already at one point? I mean, digital assets at one point were like 1 point.
Right?
Well,
Wrapped around $1 trillion, right?
No, they were higher than that.
Wasn't
Like,
it?
the whole space was almost
Yeah,
1.5
if you look
to
at
2.
the industry, the calculation gets you closer to 3 trillion, but
Yeah.
just Bitcoin itself.
Well, Bitcoin was over $1 billion. Oh, it was over $1 trillion at one point.
I mean, gold is a $12 trillion market or $12 trillion asset. Maybe Bitcoin can get to 5. It's asinine to think that this is something that's as big as global equities or real estate, or maybe even gold. But we're talking about something that today, given a little bit of a slide in the price, is closer to 550 or 500 billion. Could it be 2 trillion? Could it be 5 trillion? Could it be the size of gold? And that's the way that I think you have to look at this. If you have a long enough time frame, no one is advocating go out there, put all the money that you have into something like Bitcoin. That's silly. But should you have a little bit of skin in the game? I don't know. I think so.
Statistics. Well, our research, we've done a lot of research on correlation using digital assets, and the simple answer is yes. There's no real portfolio risk by adding 1 to 2 to 3% of your assets in digital assets. And historically, that's really, and when I say historically, over the last 10 years, that's really benefited your portfolio, both from a diversification standpoint and non-correlation standpoint. So we can argue pretty effectively and pretty confidently that you should have something. Everybody should have something, whether you like it or hate it or whatever it is. I mean, there's going to be people out there crazy, yin yangs.
It actually flattens out a little bit of your volatility curve.
Flattens out a lot of your volatility curve. It adds
done.
alpha, it does everything. But I mean, you've got, old school idiots like Charlie Munger and, that whole group that are just, they missed the boat. I mean, the train left without them. But, even the Jamie Dimons of the world, you have those are problem children, and Jim Cramers, I mean, they're not doing their listeners or their followers any favors, because statistically speaking, you want to, statistically speaking, no matter what, whether you hate it, love it, whatever, it still makes sense to have in your portfolio. Like, that's the thing that most people don't understand about risk-taking and investing. Like, you don't know. Like, Tony Batista doesn't know, Ryan Grace doesn't know, Tom Sosnoff doesn't know. We all have opinions. We don't know.
Sure.
But statistically, if you take it out of the equation, okay, it's a far worse. You're in a far worse position than the person that puts it in there. Just because if it does work, the benefits it's that whole function of, I wrote about this once, it's all about asymmetrical risk.
Yeah.
The upside is multiples of the downside. Therefore, you can't afford not to have it in there.
Right. I mean,
And that's it.
100 vol asset that's been around for 13 years.
That's right.
And people think it could go to zero. It's not going to zero.
Of course not.
Well, it elicits an emotional response.
It's not going to zero, but it can go to zero the same way that Apple can go to zero or Tesla can go to zero, whatever. It doesn't matter. Whatever has the same volatility, it's the same risk.
Well, let me ask you guys one final question as part of this conversation. If you do believe that you should accumulate Bitcoin over time and that it's going to be higher, what is your guys' strategy, or how do you trade that? Is this something where
You don't.
you have a core position, but do you sell some when it's up a certain
Yeah,
percentage?
like I just sold some. I just sold a bunch, not a bunch. I sold about 20% of my position on the rally to 31,000, and I sold some ETH too at 1,100. I'm sorry, at 2,100. And the reason for that is you just pick a spot.
Yeah.
But the problem with this is that we don't have a good derivatives marketplace yet, but we should, and hopefully we will. But in the interim, you can't really trade it. You're a buy and hold, and you buy into dips and you sell into rallies.
Very good, sir.
Well, thank
I
you.
don't know what else you can do.
Yeah.
It's just a trade.
Just a trade.
We'll take a quick 90-second break and come back. We got more Tasty Live coming up next with the market measure. Be back in 90 seconds.
Good stuff, Ryan.
Cool. Thanks.